The second reason revenue doesn't always turn into cash is that even though the money doesn't hit the bank, it's often already spoken for. Most business owners are very aware of the direct costs of doing a job, things like material, labor for the project, or immediate expenses required to deliver the work. But what often gets overlooked is the amount of overhead quietly pulling cash away from the business every single month. And these expenses happen whether you had a big sales month or a slow one. Things like payroll taxes, software, subscriptions, insurance, rent for your office space, marketing expenses, merchant processing fees, accounting and legal services, state and federal taxes for running the business. Individually, none of those feel huge, but collectively, they can create a constant drain on cash. This is why two businesses can generate the exact same revenue and still have completely different financial health. One owner understands every expense in the business, and the other only looks at revenue. Personally, I make it a point to know every single subscription and overhead cost tied to the business, because those expenses add up quickly. If revenue comes in but overhead is quietly growing at the same time, the cash disappears faster than most owners expect. And that's why revenue growth alone doesn't always fix a cash problem. Sometimes the real issue is that the business simply has too many expenses pulling from that cash as soon as it arrives.